Welcome to our educational deep dive into inflation. Have you noticed how prices for everyday items seem to rise over time? This is known as inflation, the rate at which the average price level of goods and services in an economy increases over time. Understanding inflation is crucial as it affects everything from your grocery bills to your savings. In this video, we'll explore what inflation is, why it occurs, and its impact on both economies and individuals. You'll see how inflation has shaped economic history and what we can learn from it. Today, we explore a critical economic phenomenon, the Great Inflation of the 1970s. This period is a pivotal example of how rampant inflation can destabilize an economy. During the 1970s, the world witnessed unprecedented inflation rates, driven by events such as the oil crises of 1973 and 1979. These events eroded purchasing power and caused economic chaos. Figures like Federal Reserve Chairman Paul Volcker became emblematic of the struggle to control this inflation. Volcker's stringent monetary policies eventually reined in inflation, but not without significant short-term pain. The Great Inflation was marked by high unemployment and stagnant growth, creating stagflation. This combination perplexed economists and policymakers, compelling them to rethink traditional economic theories. We'll uncover how these circumstances unfolded and the lessons they offer in understanding inflation today, paving the way for contemporary economic strategies. Next, we delve into the underlying causes of inflation. It doesn't arise out of nowhere. It can be driven by demand-pull inflation, cost-push inflation, and built-in inflation. Demand-pull inflation occurs when the demand for goods and services exceeds their supply, often seen in booming economies. Cost-push inflation happens when production costs increase, leading companies to raise prices. Built-in inflation stems from the expectation of future inflation. When workers anticipate higher prices, they demand higher wages, creating a cycle of rising costs. Understanding these causes is crucial to grasping the complexities of inflation. You'll see how these causes intertwine, impacting everything from your paycheck to grocery prices. When inflation rises, it impacts our wallets first. Higher prices mean your money buys less, reducing your purchasing power. Savings lose value, making future planning harder. Investments suffer unpredictable returns as the market adjusts to inflationary pressures, creating economic instability. Businesses may cut spending, and consumers could delay purchases, exacerbating the problem. Understanding these effects is crucial to grasping the far-reaching consequences of inflation. You'll see how inflation intertwines with broader economic cycles and the measures taken to control it. Inflation is a key element in economic cycles, impacting more than just prices. Central banks worldwide meticulously monitor these fluctuations to maintain stability. As inflation climbs, purchasing power diminishes, creating a ripple effect through the economy. Central banks use monetary policies to control inflation, either slowing down or stimulating activity. Inflation targeting aims to maintain price stability and foster growth. The balance between too much and too little inflation is critical for economic momentum. We'll explore how these mechanisms work and the pivotal role central banks play in this economic ballet, shedding light on their efforts to maintain a stable economy. To manage inflation, governments and central banks use various tools. One primary method is monetary policy, where central banks adjust interest rates and control the money supply. Higher interest rates reduce spending and borrowing, cooling an overheated economy. On the fiscal side, adjusting taxes and public spending can decrease aggregate demand, easing inflationary pressures. Supply-side policies focus on increasing productivity and efficiency through investments in technology, education, and infrastructure. These strategies, when effectively implemented, can stabilize the economy by controlling inflation and promoting sustainable growth. You'll see how these measures have been applied in various countries, providing valuable lessons and insights. Several countries have successfully managed inflation using well-structured strategies. Let's explore some notable examples and their lessons. Germany tamed hyperinflation in the 1920s through rigorous fiscal policies and currency reforms, setting a precedent in economic recovery. Japan in the 1990s faced deflation, stabilizing the economy with aggressive monetary policies and structural reforms. This example highlights adaptability in policymaking. Brazil's real plan in the 1990s, including fiscal austerity and monetary tightening, successfully curbed rampant inflation. These case studies emphasize that effective inflation control requires a nuanced understanding of each country's unique economic landscape. You'll see how these principles apply to individual strategies for coping with inflation. Inflation profoundly impacts individuals, particularly in wages and the cost of living. As prices rise, purchasing power diminishes, leaving less money for everyday expenses and future savings. Additionally, inflation increases the cost of essentials like food, housing, and healthcare, causing financial strain. To navigate these challenges, individuals need strategies such as seeking wage increases, budgeting rigorously, or investing in appreciating assets like real estate or stocks. By understanding inflation's personal impacts and managing our finances proactively, we can protect ourselves from rising prices. You'll see how inflation's broader economic effects continue to shape our world and the society's measures to mitigate its impact. Looking ahead, experts predict various trends in future inflation, posing challenges and opportunities. Understanding these trends is crucial for individuals, businesses, and policymakers. Future periods of higher inflation may be spurred by ongoing disruptions and shifts in global trade. However, advancements in monetary policy and technology may offer innovative solutions to manage inflation. Adapting to these changes will require robust strategies and proactive planning. The journey ahead is filled with uncertainties but also growth potential. Staying informed and prepared will be key to navigating the complex landscape of future inflation trends. As we conclude our dive into inflation, let's reflect on the key points discussed. We've explored historical impacts, diverse causes, and significant effects on economies and individuals. We examined strategies to control inflation and successful case studies. Looking forward, understanding inflation's future trends poses both challenges and opportunities. In summary, understanding inflation is crucial for both individuals and economies. Stay informed and prepared. Thank you for joining us, and continue exploring the world of economics to stay ahead.